Welcome to the live economic and financial markets commentary. This live session will cover fundamental analysis in the week ahead, global coverage of current economic data including major markets news analysis and events, how to apply the best trading strategies prior to news being released and after. First, I'd like to start the session by giving you some information about me. My name is Ihab Jubail. I was born and raised in Egypt. I have a passion for financial trading as well as teaching. I have been trading for a number of years, mainly on forex and commodities. And in recent years, I have also set up my own trading robot signals and website. I host online webinars and seminars on investment and financial trading regularly, and I provide my service to subscribers worldwide. Now let's start the session. The Greek stock market slumped when it reopened today after being shut down for 5 weeks, while weak data from China helped push oil prices to their lowest in 6 months, and Asian stocks close to this year's lows. Surveys showed China's factory activity contracted by the most in 2 years, ensuring a 3-month sell-off in commodity and emerging markets world continue. Brent oil fell to $51 a barrel, its lowest since the end of January. Industrial metal copper dropped to its weakest in 6 years. Gold was $1,093 after its worst month in 2 years. Eurozone factory activity grew faster than previously thought in July. The Netherlands, Spain, and Italy all reported healthy growth. Italy expansion was its best in more than 4 years. China poor data kept Asian markets from showing the same resilience. Shanghai shares shed 1.9%, Japan Nikkei slid 0.3%, and South Korea fell 1%. Australian stocks dropped 0.4%. Among the main global currencies, the dollar held steady after sliding Friday on disappointing US weak growth data. At 124 yen and $1.097 to the euro. Recent US economic data has undermined the dollar, but the broader trend has been to the upside. After the Federal Reserve last week left the door open for a rate increase in September, the US dollar has gained 7.75% so far this year against the world main trading currencies, after a 12.8% rise last year. And the dollar's recent rally may just be getting started according to some researches. The dollar recent rally may just be getting started. There are numerous economic indicators to be released this week with all eyes on US non-farm payrolls. The Reserve Bank of Australia, the Bank of England, and the Bank of Japan are due to announce their monetary policy decisions. US employment will take center stage with the release of the non-farm payroll, the most followed indicator in the forex trading. We will also watch the ADP private payrolls on Wednesday, August 5, and the US unemployment claims before the highly important non-farm payroll report. The end of the Greek debt agreement negotiations marked a return of economic fundamentals to the forefront, and investors will have to be aware of the various indicators expected to guide currencies this week. This week, we will watch also these events, as you can see, all in London time. I will talk in more details about some of this news. Australian retail sales will be released on August 4 at 2:30 a.m. London time. Australian retail sales release is usually a highly tradable report out of Australia, but with RBA potentially cutting interest rates in just under 3 hours, we should see market hesitation unless we were to get our tradable figure. Australian retail sales forecast 0.5%, previously 0.3%. To trade this news, the deviation that we are looking for the Australian retail sales release is for a minimum of 0.3 to 0.5%. If we get a 1% or better, we will look to buy, and if we get 0% or worse, we would look to sell. So 1 or better, we will buy, and if we get 0% or worse, we would look to sell. There is a high probability of market movement of over 50 pips or more in the next 2 hours if we get our deviation. We will be looking for an after news retracement trade, and we will do the 3 waits. Wait for the deviation, wait for the market to move with momentum first, and wait for a decent retracement before entering the market and buying the option. And this is a 1-minute chart for last release during and after the news release. Australian interest rate decision will be released on August 4 at 5:30 a.m. London time. Australian RBA interest rate decision is expected to remain unchanged, but RBA could definitely cut rates and surprise market in the process. Seeing that commodities are continuing their descents, rate cuts is not completely off the table. Australian RBA interest rate decision forecast 2%, previously 2%. We should trade this news safe and only take a trade if we get a clear signal. The plan to trade this release is: if RBA decides to cut interest rate by 25 basis points, we sell the Australian dollar. If RBA decides to keep hike rates back to 2.25%, we will buy Australian dollar as market is expecting no change. Ultimately, we are a bit bearish on the Australian dollar as RBA has opened the door for rate cuts and considering recent drop in crude prices. RBA definitely have room for rate cuts. This is a 1-minute chart for last month during and after the news release. Because we did not get the deviation number, the market followed the pre-release market condition and sentiment. UK Services Purchasing Manager Index will be released on August 5 at 9:30 a.m. London time. UK Services Purchasing Manager Index could be the main focus for sterling this week, with Bank of England promising rate hikes in the next 3 years. Who is to say they will not start early and move in a more gradual manner? What analysts expect? They expect UK services PMI at 58.1, previously 58.5. So then, how to trade this news? The services PMI is tradable with a minimum deviation of 2.5 between the forecast and the actual release. If we get at least 60.6 or better, we could see some demand in the pound and we will consider buying pound. If we get a 55.6 or lower, the pound could weaken and we should look to sell pound against stronger currencies. We will trade this news using our after news trading method. And you can see 1 minute chart for the last release, during and after the release. Because the deviation number was not hit, we did not see any new direction of the market, and the market just followed the pre-release market condition and sentiment upward, as you can see. US ISM non-manufacturing PMI will be released on August 5 at 3 p.m. London time. US ISM non-manufacturing PMI is a leading indicator, and because this month it's back before the non-farm payroll on Friday, market will surely move if we were to get our tradable deviation. Considering that the services sector occupies over 70% of the workforce in the US, traders will be paying close attention to this release. US ISM non-manufacturing PMI forecast at 56.4, previous 56. How to trade this news? US ISM non-manufacturing PMI is better known as the US Services PMI. The current expectation is above the 50 level at 56.4. This figure indicates an expansion in the services sector, where 50 is the medium point for the PMI. We will be using a deviation of around 2.5 points in order to trade this release. And the event that 58.9 is reached, we could see some US dollar strength, and we should focus on trading against weaker currencies. If the opposite is true and a figure of 53.9 is released or lower, expect to see weaker dollar and we should trade with stronger currencies. If our tradable release are reached, there is a good expectation that the market will move 50 pips or more within the next 2 hours. We will be looking for an after news retracement trade for this release. And you can see a 1 minute chart for July release, during and after the news release. Because the deviation number was not hit, we did not see any new direction of the market, and the market just followed the pre-release condition and sentiment upward. Australian employment change will be released on August 6 at 2:30 a.m. London time. Australian employment change release will be a market mover for the Australian dollar, especially considering that the RBA will release its rate decision a day before. It's forecasted the employment change at 12,500, previously 7,300, and the Australian unemployment rate forecast 6.1%, previous at 6%. And how to trade this news? The deviation that we are looking for is at least 25,000. 25,000 to 30,000 of difference usually produce about 40 to 50 pips or more of movement in the direction of the difference most of the time. Expect to see the effect of this news to last 45 to 2 hours. Typical news effect should last under 2 hours. One other important news to pay attention to is the unemployment rate, which is expected to rise to 6.1%. If we don't get a conflict with the employment change, then we will proceed with the trading plan. We will look to trade this using after news retracement trading method. We will wait for the market to retrace and stay out of the market during the release time. If we get a plus 37,000 of release or better, our bias will be to buy Australian dollar against other currencies. If we get a minus 12,000 of release, our bias will be to sell Australian dollar. We will only enter after we see a decent retracement from the initial spike and if we get those release numbers. You can see 1 minute chart for July release during and after the news release. And because the deviation number was not hit, we did not see any new direction of the market, and the market just followed the pre-release condition and sentiment upward. UK Bank of England interest rate will be released on August 6 at 12 p.m. London time. UK Bank of England interest rate decision will be probably another non-event, but considering how much Bank of England has become lately, we should be prepared for the unlikely, no matter how unlikely that may be. How to trade this news? In the extremely unlikely event, Bank of England hike rate 2.75%. We will buy pound because of the level of the surprise. I think we will see a strong trend change for the pound in the next few weeks. On the other hand, if we get a surprise increase to 400 billion or more in the APT, or better known as quantitative easing, it would send a bearish signal to the market and we should sell the pound in the short term. However, further stimulus is likely to help the pound in the long run. So, if you missed the original sell entry, if we get 400 billion APT, I would suggest to buy the pound instead at support for long-term trade. There is also a possibility for a third scenario, Bank of England cutting rates to 0.25%, and if that's the case, it should be a sell on the pound. Last news we will talk about today is the US non-farm payroll employment that will be released on August 7 at 1:30 p.m. London time. The US non-farm payroll is expected to be around 224,000, and with the federals kept on talking about more slacks in the labor market, we should see plenty of market reaction if we get our tradable figures. At any rate, we should stay out of the market unless we get our tradable deviation. Remember, US non-farm employment forecast at 224,000, previous 223,000. And US unemployment rate forecast at 5.3%, the same as the last release. How to trade this news? Non-farm payroll employment change release is forecasted at 224,000. The unemployment rate is expected to be at 5.3%. If we get a significant lower release on the non-farm payroll, 154,000 or worse, and a slightly higher unemployment rate, 5.3% or more, I would be looking to sell the dollar against stronger currencies as speculation for federals to potentially delay the timing for the first rate hike. So at 154,000 or worse, I would be looking to sell the dollar. On the other hand, if we get a strong non-farm payroll release, 294,000 or better, and the unemployment rate falls or remain at 5.3%, dollar could strengthen and I would buy dollar against other weaker currencies. If we get a conflicting release, then wait and see how the market reacts first. If there is an overwhelming sentiment driving the market, we'll get plenty of opportunities for an entry if we just wait for 5 or 10 minutes after the release, and you will get a much clearer view. Last thing, remember to wait for a possible revision of the previous release number of 223,000 because market usually overreacts with the revision. So then I would like to thank you for attending today's webinar. We will hold following webinar next Monday. Goodbye and see you next time.